What's up, you guys? It's Kyle, and in this video, I cannot believe I am about to say this, but the S&P 500 has reached all-time highs. It just happened. I got beautiful NYC behind me, and that you guys in Wall Street are just crazy. I don't even understand what's going on right now, but we're at fresh highs at the S&P 500. So the S&P 500, or simply put, the S&P is a combination of 500 large US companies that is one of the most commonly followed, and it's the best representation of pretty much the entire US stock market. This is all coming during record high unemployment, negotiations not being met, mass record foreclosures, mass evictions, not to mention protests in basically every major city, murder hornets, everything bad coming out right now, and the stock market is at an all-time high. Now, one thing to be clear about is that the stock market is not the economy. The stock market is a representation of what people think and analysts and investors think the future of the US economy is going to look like. So in this video, I'm going to go over what's going on, what's causing all of this, and exactly what to do now to make money in this situation. So just to put my money where my mouth is, in this video, at the end, I'm going to be investing $10,000 just to show you I put my money where my mouth is and I follow the same advice. And also, there is no reason whatsoever that the stock market and the S&P 500 can be at new record highs and I can not get new record likes on this video. So do that right now, please and thank you. It helps with the YouTube algorithm, so go hit that little like button. All right, so quick recap. So in March, we saw pretty much every market collapse. We saw record layoffs and international trade pretty much coming to an halt overnight. And so in an effort to stimulate the economy, we saw the Senate passing multi-trillion-dollar stimulus packages, the Fed just printing money and basically lowering interest rates to pretty much zero. So, and what happened? It worked. The US economy went from going from all-time highs to a massive drop and to pretty much the shortest bear market in all of history, and now we're at new record highs. So during this time, you would see all these terrible headlines just creating mass terror, basically. You saw Goldman Sachs headline talking about how the S&P could drop to 2,000. You would see this all over the place at this time. And now, why were so many of these analysts and reporters wrong about everything? Or are they right about everything? Because we still have a little bit time left in 2020, and is their predictions going to come true? Well, let's take a look first and see how the S&P 500 works, because that's very important. So obviously it's the top 500 US companies, but not all companies are weighted equally. So there is higher weight to the better the company is, the bigger the company is. For instance, the top 5 companies in the S&P 500 make up over 20% of the fund. And those 5 companies that we look at here are Apple, Microsoft, Amazon, Facebook, and Google. Then the other 495 companies make up the rest of the fund. Now, this is very important because it explains why the S&P 500 is at all-time highs. Because some of these companies, especially the top 20%, these 5 companies, are doing just fine. Actually, they're doing much better than just fine. They're absolutely crushing it right now. Apple literally today, while I'm making this video, intraday trading went to the first $2 trillion company. It took like 36 years to get to the first trillion, and in just 2 years later, it is at 2 trillion. It made another trillion in their market cap. So there is even more anticipation and more expectation that these top 5 companies and companies like this are going to pull away even farther from the pack, since this pandemic is hurting lower companies, littler companies, and there's becoming more of a disparity in the growth of these companies. But this should make investing in what I'm talking about you should be very excited about this, very comfortable about this, because you are actually investing in these companies when we're talking about investing in something like the S&P 500. So if you're looking to put your money somewhere in like a savings or checking account earning next to nothing, or it's in treasury bonds earning next to nothing, well, the only place investors have to go is real estate or precious metals or the stock market. So there's a very real concern right now of, with the Fed printing so much money, that inflation is going to go up quicker than normal. So now people are taking their money elsewhere. That's what is pushing up the stock market. I've even heard of people taking their stimulus checks, their extra $600 on top of the unemployment benefits, and popping it into the stock market, which is pushing the whole market up. So right now, everything tech is booming. Everything more in hospitality, travel, stuff like that is still hurting and still low. But what you can do right now is invest in ETFs that follow the S&P 500, the NASDAQ, or the Dow Jones. Honestly, I have no clue what's going to happen in the stock market tomorrow, or the rest of the day today, or an hour from now. No clue. Not even the best stock market analysts, the people that sit there all day long looking at the computer screen, are perfect at timing the market. And you should actually be happy about this, because I'm not a great investor, yet I've made money in the stock market. And two quick personal stories I'll tell you right now. So two things I invested in right when it was early 2010, 2011. I invested in Netflix and Amazon. Now, without even looking at the account, these stocks just went up. I wasn't even paying attention to them. They went up like 600 to 1,000% or something like that. Now, during this time, I was also making money primarily in real estate, and I was handing it off to a financial advisor who would just, I was paying him a small management fee to just invest my money in whatever he was investing in stocks. So then in 2017, fast forward, I started getting involved and interested in the stock market again. I started to want to have a personal account. Now, I had those Amazon and Netflix stocks, which rose heavily, but I wanted to, invest some more money and just have my personal account to make some trades on. And what happened was I came across wheat stocks, which made an investment in, and they appreciated to like 1,200% or something like that. And in hindsight, could have been like, yeah, get out when they're at the top like that, because they all came crashing down again. So no one can ever really pick. You can start shaving off a little bit if you're making gains. No one can blame you for making gains, but it's very hard to pick the top and the bottoms of stock market, and especially individual stocks. See, timing individual stocks is like gambling basically. But what you do know is that investing in the market as a whole has seen annual returns of 10% year over year. So even if it goes up, if it goes down, as you're constantly and consistently buying in, you're going to see those annualized returns. All I know is this: whether it goes higher or lower in the short term, it doesn't really matter. Consistency and long-term investing is the only thing that really matters. And in fact, big dips in the market, you should actually be excited about, because you're basically buying in as long as you have cash to buy in and consistently are doing it, you're getting basically everything at a discount. So the best and only strategy really is to invest in ETFs like this that follow the stock market as a whole. S&P 500 is basically led by tech stocks. NASDAQ is majorly led by tech stocks. The Dow Jones is not yet recovered, but give it time. Once a vaccine's figured out and everything starts getting back to normal, that will recover as well. So in a nutshell, here is 7 reasons why to invest in an ETF that mirrors something like the S&P 500. You are investing in the entire US economy, number 1. 2, compounding works to your advantage, dividends. 3, takes emotion out of the equation. 4, long-term data looks promising. 5, easy for anyone to do. And 6, investment risk drops substantially. And 7, and my most favorite, you will sleep better at night. So funny enough, I went to school with a kid in college he was going for business, and I had asked him, what do I invest in back then? And he was like, really, I would just invest in something that mirrored the S&P 500. And in hindsight, if I would have just invested in that, and instead of touching on all these individual stocks, I would have made great returns year over year, not had to worry about anything, not been looking at my account every hour or so to see how a stock was doing. And it would have been fantastic. I would have just been making compounding interest, dividends, and it would have just been growing and growing and growing. So that's everything. And don't get me wrong, I will take chances once in a while. I will do educated gambling and invest in a stock that I think is actually worthwhile. Just for instance, PLNHF, Planet 13. It's a single stock. I just invested in that, and say you put 5K in and it doubles, which it did, and then take your profits out, and then where the rest of those profits went? Into something like this, the SPY. And so that's pretty much the game plan going forward, at least for the personal account that I'm handling myself. And just so you can see that I'm putting my money where my mouth is, here is me purchasing $10,000 of S&P, the SPY ETF, which mirrors the S&P 500, when it just broke record highs. Here's my account and the SPY. I'm gonna buy 30 here at 338.53, review order, and 10,155.90 and place order. Now, I don't want you to look at this and watch this video and next week after this date and the market be down and you're like, Kyle, that is ridiculous. You just made a horrible investment. What are you doing? And similarly, I do not want you watching this and the market keeps continuing to raise and you're like, Kyle, you're a genius. You're investing when, it's at record highs and it's, you bought in and everyone else was scared to and you just made gains. I don't want any of that. It's not about that. It's about making investments consistently into ETFs like the S&P that follow the market as a whole. And you know what? If it does go down a lot more, I'm just gonna buy in more because it's all about getting that at a discount and then just waiting for the returns in the future. So guys, thank you so much for tuning in. Please destroy the like button below. Go smash it till it turns blue right now. Seriously. If you lost money in the stock market this year, take out your aggression on the like button. Helps with the YouTube algorithm. Go there and also subscribe if you have not done so already and hit the notification bell so you'll get notifications every time I post a new video. And don't forget to follow me on IG. I post there pretty much daily, so you will get other aspects of my life as well. Guys, thank you so much. If you want a free stock, go below. You can sign up for Robinhood. It's a Robinhood trading app. You can also buy into the ETFs on there, so you might as well sign up and you will get a free stock. And then also $5 for free if you want to subscribe to Acorns. Acorns is something I use myself. It rounds up your digital change and it's pretty cool. So go check that out below. Check you guys later. Thanks for tuning in.